to the world's largest artificial intelligence ETF, which has arrived in Australia. The Global X Artificial Intelligence ETF will be the first of its kind in the Australian market, providing investors with access to one of the fastest growing investment themes. To discuss this, I'm joined by Global X ETF's investment strategist, Billy Leung. Billy, great to see you. Thank you so much for coming in.
Thanks for having me here.
So it launched today, listed today, very exciting. Tell us about this ETF. It tracks the index, the Artificial Intelligence Big Data Index. But I'm sure everybody wants a piece of the pie, but they probably would love to know when they buy the ETF, what sort of companies are they capturing?
Sure, that's a good question. I mean, if you look at the methodology in terms of how the stocks are selected, the first thing we have to look at, it comes from developed markets. So it comes from about 25 to 76 certain countries. So that establishes our initial portfolio. And then it goes to slightly more technical, but there is a market cap determination. So it has to be at least $2 billion in market cap. And then, we go to very distinct methodologies where we split between category 1 stocks and category 2 stocks. So category 1 stocks is where we include stocks which are developing AI or using AI as a service, okay? And then our category 2 is our stocks which are more hardware stocks. So these are the ones where they're developing the chips, innovating the chips to develop our advanced AI. And then we also have an addition of quantum computing developers there as well. So it's a subset of these four types of companies which make up this index.
Fantastic. So some picks and shovels in there, as they're likely to referred. So NVIDIA, I'm sure, is one of the
That's correct, and it's one of the top 10 as well.
Yeah, absolutely. And then the software companies, probably lots of names out there. So I guess for investors here, they might say, well, what do I get out of this ETF versus buying, let's say, the NASDAQ index or the S&P or something else, or doing some stock picking?
Yeah, sure. That's a great question. I think one thing we have to understand or appreciate is if they take a step back and understand that artificial intelligence as an investment concept is actually very wide. It spans from subsectors, sectors, it spans geographically as well. So investing in this requires some hard work. So looking at this, for example, we need to invest in hardware stocks. We need to invest in what I call the enablers. So these are the companies establishing the foundational AI platforms like cloud computing to actually make advancement and to lower the barriers of entry into artificial intelligence. And then finally, we have the adopters or the users, which are the ones that are actually using this AI in their products and services and to drive business value. So in order to actually have all these is to gain exposure is in this ETF where we have to have all these sets of categories of stocks.
Yeah. It has been such a huge theme, something that we're always talking about. It looks like the amount of money going into AI in the United States is just enormous and sometimes hard for people at distance to appreciate. Some people talk about valuations being too stretched at the moment. Do you think investors need to worry about that as much when you're buying an ETF product versus an individual security?
That's a good question. I think there's some misconception out there, and I think one thing to look at is we know that the share price are rising, but not necessarily valuation. So we now have to understand what is driving the share price, and there's two things. What analysts look at is it driven by earnings or is it driven by valuation? So my argument, or what we're seeing right now, is that a lot of these so-called outperformers in the artificial or even tech sector is actually driven by earnings. And a perfect example is NVIDIA. It's been on a stellar rise in terms of stock price. But if you look at the valuation, it's actually been trading around 30 to 35 times PE. So the valuation expansion is quite limited, which is somewhat good because valuation expansion means more speculative money. It's actually driven by earnings expansion, which is why we're seeing every time NVIDIA comes out with results, it shoots up because it's actually beating the analysts and earnings as driving, and which is much more a fundamental view of the company and much more sustainable for share price as well.
For the mega cynics out there, because there are always the cynics out there, and they'll say, oh, well, of course, we had the narrative around the macro that interest rates were coming down, and this just happens to be the theme of the day. It's just all too bubble-like. What would you say to that? What's the long-term mega trend or secular theme here?
You're exactly right. I mean, we know how big AI could potentially be, how much impact it could be on different industries, and I think I'll probably leave the cynics with this view that this is a very favorable market condition we're at right now. So, I've been an analyst for a while, looking at tech for a while, and what we're seeing right now is a very disruptive technology, AI, combined with the technical capabilities. We've seen computing power rise very much and then also the cost coming down, we're also seeing companies at a very solid financial position. We're seeing major tech companies with positive balance sheets, positive free cash flows, and finally, we're seeing very limited resistance by all industries. So everyone's very receptive of it. So how I see it is that we have a disruptive technology combined with very strong technical capabilities, very strong innovative companies in terms of balance sheet and financial strength, and finally, very, very receptive industries for this new technology.
Just digging into the weeds of the ETF. So obviously it's got, as you said, it's cross-geographic in terms of the companies in there. Investors that are buying it in Australian dollars, is it currency hedged? What's the
No, our ETF is not currency hedged, but we have to understand that we're also buying a lot of these companies spread geographically, not just in terms of where they're listed, but also where their business operations are. So we're getting a very well diversified portfolio of companies and also business operations as well.
Fantastic. So anyone that wants to learn more about this, where should they go to?
Feel free to jump on our website at globalxetfs.com.au.